Got a great panel here. Starting on my left, we have David Swanson, Head of Lending at Archover. As Head of Lending, David is responsible for the strategy and execution of identifying and engaging funders for Archover, a P2P business lending platform. As a former institutional lender and with more than 30 years' experience in the securities business, David is intimately familiar with the lender's perspective, having held senior roles in P2P business lending, portfolio management, business development, research, sales, and client service at several global industry-leading firms. Next, we have Roxana Mohammadian-Molina, Chief Strategy Officer at Blend Network, a peer-to-peer lending platform that was last year selected by the Mayor of London as one of the UK's top 10 FinTech companies. She's responsible for the platform's growth and strategic partnership alliances. She's also previously worked at Morgan Stanley and founded her own mobile beauty platform, Zeba, which was dubbed the Uber of Beauty by the Daily Mail. We also have Thikhoze Banda, UK Country Manager at MangoPay. Thikhoze joined MangoPay as a technical accounts manager for the UK in 2016, and her all-round expertise in payment services is put to good use thanks to daily client management, technical support for onboarding, and constant investigation into what new features and payment methods will keep our solution at the top of its game. And finally, we have Daniel Lanyon, editor of AltFi, UK publication focused on alternative finance, FinTech, and peer-to-peer lending. Previously an award-winning journalist at FE TrustNet, and has worked as a journalist at various media organisations, including The Times, BBC, and Reuters. So this panel is all about growth in P2P. So I'd like to ask my panelists, how do you define growth in P2P, and what sort of markers do you sort of see as, pointing towards the industry's future success? It's not all about origination volumes, is it? I don't know, maybe David, if you want to kick this one off.
Sure. I'd reframe the question, though. I wouldn't say growth in P2P. I'd say that it's linked to the success of the businesses that are able to find funding. Because really, P2P is fulfilling a niche in the marketplace that the banks have decided to abandon. And if we can help small to medium businesses if we can help small to medium businesses by providing working capital that helps them grow, that's where we can be successful. And the more success we have with that, the more we can grow. And I think that applies, that sort of same logic applies for the industry.
What do you think, Roxana? Obviously, Blend's a slightly newer entrant to the market. How do you define success for you in the industry?
Yes, very much agree with David, really, and I think it's interesting also the growth that we have seen in retail lenders on the platform. So it's that combination of family offices and more high net worth, but also is a product that is increasingly appeal to retail investors who, in a sense, have been penalized over the past decade or so by the interest rates that we have in the banks. So for me, it has been interesting to see the growth in retail lenders' interest in the peer-to-peer sector.
Okay. And Thikhoze, you've obviously got a bit more of an overview of the market, speaking to lots of different peer-to-peer platforms, in regards to payment solutions. What sort of things are you seeing, and how would you define growth?
I think for me, defining growth is really about investors and how they take on to these platforms. Because it's one thing having the platforms available, but you need to ensure that people are actually aware of these platforms, that they're using the platforms. And that really defines the success of that industry by ensuring that you don't have platforms. So for example, you might have 100 investors, but they're all using the exact same platforms, all 100 investors, but you've got a population of 1,000. It's ensuring that you're tapping into that entire population, making sure that they're aware of these opportunities, they're aware of these alternative methods to the traditional banks, and are actually able to access them and use them. So I think thinking about it in terms of how many investors in the population, how much of the population are actually aware and are actively using and looking at these platforms is a real indicator of a success, making sure that it's not just a niche of the population, but seen by everyone, really inclusive.
And Dan?
I would say, I would actually disagree to some extent. So I think peer-to-peer lending, whatever the right term is becoming more of a institutional investor asset class. I think retail investors, the population as a whole, will continue to be an important part of the funding mix, but I think the sort of trend rate that I see continuing is one of a more a specialist asset class that is not necessarily known about by great swathes of the population. I think the sort of data at the moment suggests that there's a sort of 50-50 split between institutional and retail funding across the industry, but I think that's definitely starting to change.
People from the platforms here, what do you think? Do you think there's still a place, David, for the retail investor in P2P?
I think there will always be a place for the retail investor, but I do think that with the, for instance, for the document that the FCA put out last summer with its, I'll say suggestions rather than recommendations, I think the regular retail investor is going to get pushed away from the business, and there's going to be more accredited or sophisticated investors that are going to be allowed on platforms going forward. I do agree with Daniel that institutions will eventually come to dominate the business, but just as with, when you look at, say, equity investments, there will always be people who want to choose individual stocks. And I think with P2P lending, there will always be people who want individual loans or mortgage pools or whatever it is that's on offer. So I don't think they're going to get pushed away entirely, but I think they're going to get crowded. They're going to get crowded out.
Well, do you agree with that, Roxana?
I think in Blend Network is a property peer-to-peer, so I think in property it's maybe a little bit different because the property is something really that traditionally is very tangible, for retail investors wanting to invest. It is very easy to understand, and obviously you have had a lot of people who have traditionally invested in buy-to-let, and so it's a way of diversification from the traditional buy-to-let investment. So having the fact that it's property-backed and is tangible and easy to understand, it really, I think, is a lot more appealing to retail investors, and we have seen a big increase in for our platform in retail investors.
In terms of regulation, how concerned are you about the FCA review, and how big an impact do you think it actually will have? I mean, you already get sort of appropriateness tests on, crowd bonds and equity crowdfunding. So why not in P2P? Is this something which actually is just going to be a formality that the industry has to go through, or is this going to have a big impact on its investor demographic?
Well, I find, let's put it this way, I love regulation, but I think it's incredibly annoying at the same time. I love it because it protects all of us. It's like having a compliance department in your office. You know that they're going to bother you from time to time, but they're going to keep you out of trouble if they're doing their job. And I think the FCA is trying to plow uncharted fields and come up with the best way to protect everyone's interests. So from that perspective, I think it's very positive that there is as much regulation and that the FCA has taken the proactive step of writing possibilities for the future.
I agree. I think it's a very welcome move, especially because, as I said, we have seen a lot of increase in retail investors, and for retail investors, it is very important to have to be. I mean, the FCA I think has done a great job in terms of educating and providing that regulation. So we think it's a very positive and welcome move for the industry.
Thikhoze, do you agree with that?
Yeah, I do agree that a lot of the changes the FCA wants to make is really to safeguard investors, and also just to make sure that you're encouraging good platforms, you're encouraging good platform behavior with visibility, with the information that they're providing, and it's trying to ensure that investors are limited at the risk. It's trying to ensure that, I think there's an extent, because with some of the restrictions in place that we were talking about before, like appropriate tests, they're really important, but it's all about how I think the platforms then go about it, because in insurance, for example, people lie all the time. So it's making sure that you're doing these tests in such a way where you're not still exposing people to risk, you're still ensuring that people you're getting the correct information, be that using open banking mechanisms to see the history of users. So I think what the FCA is doing is really important. It's just trying to ensure that we're weeding out the bad platforms, keeping the good platforms. But it's also about ensuring that the platforms are actually managing it in such a way where they're not badly restricting who can come and access opportunities.
And I think many platforms are already really implementing those measures, like what you mentioned, the appropriateness test and all those. It is something that many platforms are already have in place. We have that in place. We have had it since the beginning, and I think, yeah.
Do you think it's going to be a big challenge for platforms that don't have it in place to implement this in terms of cost and procedures?
Potentially.
Yeah, I think it's going to be expensive. I think it's going to be time consuming, and I think it's going to be necessary. To give a parallel, I think for most of the people in this room, if they saw an ice hockey game, and I'm Canadian, so I feel I can talk about that, but if they saw an ice hockey game, people would go, what are they doing? The parallel is that if you know the rules and you know how the game is played, you can play it quite well. You can have a lot of fun with it. And it's the same thing with the regulator's position in P2P. If there are rules that are clearly established, it will draw in investors. It will also allow people to borrow money more comfortably. And so I think that the process that the FCA is going to go through, or regulators in general, is going to be cumbersome, difficult, time-consuming, expensive, and worth it.
Yes, I completely agree.
What about you, Dan?
Sorry.
Sorry if you lifted off there. Just regulation. These guys seem broadly supportive and think.
I have no idea what the FCA's sort of findings will be, but my sense is that they will be less severe than maybe a majority think. I also think that they will find it hard to enforce some of the sort of proposed ideas, such as the 10% limit. You know, it's basically unenforceable to know exactly how much an investor has, you know, across various different platforms or asset classes, or, you know, or their pension versus their ISA. So I think, you know, clearly something is coming along the track, but I think that it won't really be as worrying as we're sort of talking about at the moment. What I do think is interesting is that, you know, clearly there is a concern at the FCA, which, you know, is I think partly warranted. I think it's partly unfair, owing to, you know, recent sort of scandals and collapses and near collapses of certain platforms, which, you know, we won't mention their names, but I think we all know their names. And so you do have that, I think, at the FCA, which is fair. But I think what you know, is also very much the case is that you know, this sector, this area of FinTech, has enormous support in government. You know, both in the amongst elected and non-elected politicians, but also within the civil service and the Treasury. So I think that, you know, the volumes, the gross volumes last year, I think, are circa 6 billion, forecast to be 7 billion this year. You know, that's a really important part of the economy, and I think that there will be a force that says, don't mess with this.
What did you think about the FCA's warning, right at the peak of ISA season, just coming up to the end of the tax year, saying that ISAs are high risk and consumers should think very carefully before investing? I mean, do you think that's, you know, reasonable to, you know, tell consumers that, you know, all peer-to-peer investments, you know, well, the ones which are ISA eligible, are high risk, or do you think that's perhaps a bit extreme?
I think it's a bit extreme, but I also think that, you know, human beings are frankly quite bad investors in general, and so I think it's very worth reinforcing the message that, you know, is very, very hard to sort of put into practice, you know, which is, you know, you are really gambling with your money when you're investing, you know, unless you are taking proper advice, you know, doing very thorough research, you know, so I think, you know, there is I think there is an important message that maybe isn't as widely understood as it should be. But that being said, I do think it was an extreme statement.
So, I mean, we focus quite a lot on the investor side in terms of growth in P2P, but what's on the borrower side? You know, what are the sort of challenges and opportunities facing the industry when it comes to boosting origination? Perhaps, Roxana, if you want to.
Yes, I mean, we focus, as I mentioned, on property, and So the government has a target, to build 300,000 new houses per year. At the moment, not even half of that number is being built, and simply because there is a huge funding gap in the market. I think the Bank of England data said last year it was traditional banks, they lent 6.6 billion, and the need in the market is between 20 and 25 billion. So there's a huge funding gap, and there really is, demand for alternative sources of finance. And I think especially among the small and medium property developers across the regions, those that are really underserved by the traditional finance channels over the past decade, they have been really left out, and this is what we see really.
So do you see any challenges, or is it just opportunities for you?
There's a lot of opportunities in that market. Obviously, we have an origination team, and I'm sure all the platforms have to be able to do the due diligence on the deals. So not all the deals that come to us, we accept them for sure. So it is important to do the due diligence, but there's huge opportunities.
What about you, David, on the SME side?
Well, I think the biggest challenge is probably the lack of awareness from businesses that this source of financing is available. I think that there are a lot of businesses that simply wouldn't consider anything except a high street bank. They've been conditioned to think of whatever the name of the bank is, and that's the one that is top of mind. Once they realize there's other sources, then I think origination can pick up. So I think that awareness is a part of the problem, and I think once awareness is raised, then I think origination should be in abundance.
One thing I always get told is that lending's easy, it's getting the money back that's hard.
It's a very wise saying.
Are there limits to how quickly the industry can scale in terms of origination while keeping, maintaining good quality underwriting and not just, wanting those headline figures of we've lent out this much?
It's an excellent point. That is a huge challenge for the industry to make sure that they can scale their business, and that whether it's my firm or any firm, it doesn't really matter. The two biggest problems for any smaller firm are managing the growth and finding the right people to help you manage the growth. And if you can address both of those, then you can handle pretty much any obstacle that comes to your way or appears in your way. But if your origination gets sloppy, if your credit quality or credit process gets sloppy, you're going to make mistakes and people are going to pay for it. And if people lose money because of that, then they're going to become cynical and very skeptical about the industry.
Yeah, just today there was fresh data on, rising solvencies, personal solvencies and corporate. To any of the panelists, how worried are you about the macroeconomic climate and how things are changing in terms of growth?
I think you really can't separate the sort of wider economy from this sector. The sort of consumer segment of peer-to-peer lending was basically flat last year. It grew about 4%, so not bad, but certainly a real climb down. I think that was largely because consumers were demanding less credit, so I think it's absolutely linked. And of course, for SME lending and for business lending in general, I think it's absolutely linked. So.
What about you, Roxana? How concerned are you about worsening market conditions?
I think it really depends. In the property market in particular, is really a London versus the region game, I think. And it's really a two-speed market. If you go even 2 hours outside London, you see that the market really in the niche that we focus on remains very strong. Like, quarter one data shows that even going 2 hours outside London, you have average growth rate on property prices that is 4 times average of the UK. So I think it's really is focusing on the niche markets and we see that is a London versus the regions story. So the regions, they continue to be very strong, especially in the more affordable side of the housing market that we focus on.
And Thikhoze, have you sort of heard any more caution coming from the platforms you're speaking to, perhaps in terms of their ambitions to scale up?
I think with the platforms we've been talking to, it's like what David was saying earlier, it's all about awareness and there's a lot of ambition and they see the opportunities in order to start onboarding and getting more borrowers. I think especially if you look at the rates of which borrowers have been accepted onto these platforms, it's been increasing, especially with SMBs. And I think what's really good is seeing that government's really wanting to ensure that if SMBs are rejected from the banks, for example, you can redirect them to these platforms, and that really helps with that. So from talking to businesses, there is optimism, I'd say. There's definitely optimism in that things will grow, that they'll be able to scale, but talking to them as well, there's this level of worrying how they scale and keep the true nature of what they feel P2P really is at the moment. Businesses don't want to scale and lose that aspect of what is, I don't like the word alternative finance, but it's so popularly used, but what that aspect of alternative finance is. They don't want to scale into banks, they don't want to go into that stage, they want to ensure that they're true to the reason why people were coming to them in the first place and why these small businesses were coming to them in the first place.
We've got to go on to look at the polling questions in a minute. But before we do that, I'd like to know, what sort of, what sort of innovations or what sort of things are you hoping or expecting to see in the peer-to-peer lending industry? Where is the future of this industry? Maybe if you want to.
Where I would like to see innovation and much further research and development is in the credit quality analysis of small businesses. It's a very tough slug. I spent a lot of time on the large cap side, and it was very easy to get analysis of big companies, especially ones that are publicly traded. But smaller companies, there's a lot of grunt work that goes into it, to figuring out how things actually work. And especially where you're dealing with family-owned businesses or things like that, because you'll get things like, well, we've always done it that way, or it was good enough for the last guy, why isn't it good enough for you? And for the companies that we deal with, we put in place a way to measure exactly what they're doing that can raise their standards. So the innovation that I'd like to see is better credit information on smaller businesses.
Using open banking or?
I'm sorry?
Open banking, do you expect that to?
I mean, it's going to be positive. I mean, you look at what we're talking about here with FinTech. We're doing old-style finance. We just have better and faster tools to do the job. So open banking is going to be a great positive, I think. And it's all change, right? That's the constant we've got, because as we know, if you don't like change, you're going to like irrelevance a lot less.
So I'm just going to move on to Roxana now.
Yeah.
I know we're running low on time.
I think we've heard a lot about AI over the past 2 days here, and I think the opportunities for the peer-to-peer are also really interesting. Maybe more for SMEs than for the property, because you have just more data on the SME side. But definitely, I think the opportunities that AI open up for peer-to-peer are very interesting.
And Thikhoze?
I think I definitely like to see, as you mentioned with open banking, I definitely like to see more platforms using aggregators in order to get information to make really unique offerings to their users. But in addition to that, I'd really like to see, I think you'd get more innovation from collaboration. There's going to come to a stage where we're going to have a zillion different P2P platforms, and it's never going to work having so many. And seeing platforms starting to collaborate, share their investor base, figure out how they can lean off one another, I think that's going to create a real environment and a hot space where people start learning from each other and are able to innovate together rather than just seeing it as one for all and all for none.
Great. And Dan?
I agree with all of the above, but I would say I still think there is a worrying lack of knowledge and education among financial intermediaries about this sector. And we're talking about peer-to-peer, but really what we're talking about broadly is sort of loans as an asset class. And I think that institutional investors are clearly very interested in this, but I think financial intermediaries, either through a mixture of sort of obstinacy, but also through not really understanding the asset class. I think their end investors or their end clients are suffering. Last year was a year where nearly every asset class lost money, apart from peer-to-peer and lending. It was a bright spot for any investors, and I think it's a shame that so many larger wealth management firms and IFA firms basically have a moratorium on recommending it to their clients. And I think that, that should change. And that could be through some sort of regulation, perhaps intermediaries should have to learn the basics of, loans as an asset class in the same way they have to understand equities and bonds. I think that would be a good start.
Great, thanks. Cool, great. If we have a look at the polling questions, hopefully everyone's been on the app. Right. Well, I'm hoping that was more than one person voting. So Roxana, what do you think of that? It's obviously a really, really comprehensive survey of people's concerns.
Yes, I mean, it's, simply having the property as a security to your loan, as a first charge security to your loan, I guess is makes it less risky.
Oh wait, we've had another vote now. Was that you, David? Well, should we move on to the next one, maybe? I think that's said it all. Yeah.
Can I just quickly say, I don't think there is a sector that's less risky. I think it's how you originate the loans and, the work you do. I mean, just in case that wasn't obvious.
Yeah. Have we got the next question coming? So the future of P2P, so we did touch on this, whether it's institutional, retail, or 50-50. Well, no one seems to think the future's retail, sadly. Seems to be, most people seem to think it's more of a mix, though. I guess, do you see it evolving into a similar market to the US, where it's so institutional heavy, or do you think that there will still be more favour towards the individual investor going forward? If anyone wants to.
If the institutions come to the decision that this is an area they want to fully participate in, the funds will just dwarf any possible retail investment. Mind you, if they do that and then they decide they don't like it, the funds can disappear just as quickly.
Yeah.
So my answer would be that I think institutions will dominate it. I think there will always be some retail participation, but I think institutions will dominate it.
Should we move on to the next question? Why do you invest in P2P? It's a very even split. So we've got why do you invest in P2P? Some people want diversification, better risk reward, and to support the economy.
Feels a bit like Cheltenham.
Well, I suppose there is all good points. Seems to be pretty evenly split. I mean, when we've surveyed our investor audience in the past, I mean, rates of return 100%, always fair top, followed by security usually. I mean, I guess, do those results, does that surprise anyone, or is that?
I mean, I'm surprised that someone invests to support the economy.
Exactly, that's what I was going to say. My investments are all selfish.
Yeah, maybe some people are just more ethical than you, Dan.
Yeah.
And they definitely need advice, I think.
And should we look at the last question? The biggest challenge facing the P2P sector. Okay, so we've got platform insolvencies currently the highest. Oh, no, economic downturn. Again, quite a sort of, a sort of relatively even split across all the answers, really. I mean, what do our panelists think? Roxana, out of those, what would you vote if you weren't sitting on the panel?
I mean, a lack of awareness is definitely, I think, is a good point. Challenge, I'm not sure it's a challenge, but it's definitely is a question that needs to be addressed, and more education needs to be, needs to be done. But yes, I mean, I definitely agree with lack of awareness.
What about you, Thikhoze?
I think I agree that lack of awareness, I don't know if it's a challenge, but it's definitely something platforms need to do more to try and raise that, and even the government, not just, I don't think we should restrict it just to platforms, but government as well needs to do more. But I can see why people would say platform insolvencies as well. I think challenges for the P2P sector will also come from the people who are using these platforms. And if you see platforms becoming insolvent, if you see any red flags really about these platforms, then that can be a challenge because it affects the viewpoint that people have of the entire industry rather than that just one platform.
And what about you, David?
Well, when I see the word challenge, I think it implies that it's something you could have some influence over, and economic downturn is definitely not the answer there. I would say that, as I said earlier, lack of awareness, but I'd also say that there is always a risk of platform insolvencies.
Yep. And very quickly, Dan.
I think a really big scandal would be very detrimental, but I don't think it would be the end of the story. But yeah, I think probably most importantly is when an inevitable downturn or very slow period of growth occurs, which is inevitable. It might not be for 2 or 3 years, but I think how platforms sort of handle that period will be very important to sort of who survives. Sure.
Yeah, definitely. Cool, great. Well, thank you so much to my panel. Hope that's all kept you awake at near the end of the 2-day event. So thank you very much.